Welcome back, guys, to another Sunday analysis video. Now, the video last week got some amazing support, so again, this week, if you enjoy this video, if you find it useful, make sure you drop us a like and let us know what you think down in the comment section below. Also, if you are looking to join our Discord community, then the link for that is down below. If you want to stay up to date with the Sunday markups and the literature to go with these charts, make sure you follow the trading view, which you can see on the screen right now. So, without further ado, let's get on to what we are looking at this week. So, what we're going to do this week is we're going to look at the previous week markups that we gave out, and then we're going to go off to the new current price action and reference these points. So, we're going to start off with Euro here. And last week, for anyone that watched the analysis video, you will know that we gave out the principles and ideas for the scenarios we have in place, and we wanted price to run bearish within the upper end of this range, bringing us back down into ultimately the discount area of a higher time frame bullish range, giving us the potential for more bullish price action. Now again, we know, and for anyone that paid attention in last week's video, that the higher time frames on this pair are bearish, and we are waiting for this pair to align bearish with that principle. That's why there's a lot more bearish scenarios within this markup than there is bullish. So if we play this, you can see we had a pretty nice move consistent with what we wanted to see in terms of price action. So keeping this in mind, let's go to the present day chart. Starting off on the daily time frame, we have the same 5-minute range, or should I say the same daily range here, with a liquidation of the high and price playing lower. Now again, we failed to close above this high, so we are looking at the same principle. Now we have played back down into the last order block created, and we have seen a slight push higher. Now coming down to the 4-hour time frame, you will see the relevance start to come into play here. Now of course, as we've said before, this is a 4-hour chart, so it is a much higher time frame than the time frame that you're going to be looking to necessarily trade within. So keeping that in mind is important, because a daily range doesn't define the trade you're going to take within a 1 minute or within one trading session. So do keep this in mind. So a few areas and a few different scenarios here for this week. We have a 4-hour breaker structure from last week's bullish range created. We have a bearish high and a bearish low, which is our current range, and we have a liquidity pool created above the trend line liquidity here. Remember, just because there's trend line liquidity above highs doesn't mean we automatically insinuate price is going to run bullish. That is not the case. Of course, we can use it and lean into the principles that price shows us, but we don't automatically see this and say it has to go bullish, because that's simply not the case. So what do we have? Well, as we stand, we have the same areas that we marked up from last week left untapped. We have liquidity above the current bearish range that we're within, and we have a sign of consolidation in the upper end of this range. So, keeping this in mind, what we are looking at for this week is a possible, and again, possible liquidation of the highs, bringing us back down into a scenario of bullish price action if we break above this high, only if we break above this high, or price action to run bearish after doing this move. Again, this is only a potential because we have liquid and we need to keep this in mind. We will tell you the key principle that what we're looking at here in a second. And the key principle, keeping this point in mind, is where we are right now. We're either going to visit the liquid above, revisit this area again, and then this is where we'll define if we're going to run bullish or bearish out of here. Of course, this breaker structure, if it occurs, will give us an inkling as to what we may expect. But as it stands, we're bearish. We have a bearish range, and we have price action consolidating at the high end of this range. So we're looking for potentially this move to occur, which would give us a run down to target this low. This is my preferred move. Price running down bearish into the low area that we highlighted last week. If we come down, break this low, then we ultimately will be bearish across multiple time frames, even though we're already bearish on 4 hour. I would also like to see price break this low if we're going to go bearish, and that will give us a possibility for entry in this lower end. Again, if you want more context behind that scenario and why we're looking at that, Discord is the place to find it. Link is down below. So main principles here is we have broken bearish on the 4 hour time frame. We have an area that potentially buy side could come into, but the main principle here is that we are looking for bearishness within the range that we have already established, expecting this price action to continue, knowing there is a potential for the liquidity created above these highs to be taken, but we do not expect this to happen until price action and structure gives us an idea that we could actually do this. Ultimate areas to look at for this week: the 4 hour low I'm expecting to be ran. Watch this 4 hour high for potential bullish indication, and ultimately this area is going to be the defining factor for euro if we're able to get here. So let's go over to gold. Last week on gold, we gave out the idea of this. Now, this idea, again, if you want the literature in a little bit more detail, you can find it down here, which is my TradingView account right there. We are actually trying to get to 500 followers on the TradingView account. So let's see if we can do that. So right now, from where we gave this markup and we shot our last Sunday analysis video, we have an area that we're looking for potential buys, or we run this low, we have a small pullback and we look to sell. Now, if we play this forwards, you'll see that we actually ran the high. We came back down after putting in a high on the 4 hour. We had zero reaction at this order block. We broke lower, we had a small pullback and we sold off. So the sell side scenario that we had in mind actually worked perfectly. It was a really, really clean scenario, really, really nice setup, and it leads us into what we have in mind for this week. So again, to the daily time frame for reference, remembering that the daily time frame is not going to define necessarily the trades you take on a given session or day, but it is going to give context as to what you could expect on a higher time frame basis and aligning yourself with trend. So right here, we took out the high that we had marked on the daily time frame. We closed above, we put in a bullish high, and we had a previous bullish low. We've come down in last week's price action, taken out this low, and we are now waiting for the bearish low to form within this daily range. Keeping this in mind, we have an area of momentum. Fair value gap was created after breaking down. So we are looking for a low to be created, price action to either take this low, so it would look a little something like this, a low, price action breaking this low, and then potentially taking out a high if it places a new smaller range. Again, this is daily, so it takes a long time for this stuff to form. Or we're looking for a price to pull back into here and break down within the lower time frames, allowing us to sell to the low of the range that's created. Now, of course, we know, and you guys probably know, overall we are bullish on gold, but we have to follow what price is telling us. And if it's telling us there is potential for shorts, then we must make sure we follow that context. Doesn't mean that we marry our bias and we consistently only do one thing. We still have the freedom to follow what price action is showing us on a given day, given session, a given minute, a given second. But always keep in mind, context is key, and this is the context you have. Also, while we're on the daily time frame, we have a major low and a major high. So if we pull back, I will be looking for possible bullishness to come out of these lows. Again, this is a high time frame here, so I'm not expecting anything to happen in that sort of intricacy in terms of this week coming. Let's get down to the 4 hour time frame now. So again, giving the same principle a little bit more relevance and a smaller outlook here, you can see we have our potential moves marked up. So we had a bullish run last week. We showed you the order block. No reaction was created. We made a short-term pullback. We then ran lower. That was one of our scenarios we gave out. In terms of structure, we created a bearish 4 hour range, a new bearish 4 hour range, and we now have a high and a low on the 4 hour time frame. We've hit the 50% or thereabout, the equilibrium of this range, And I'm looking at this point where we sit right now as our defining factor for what may happen. Now remember what I said on the higher time frame. If we break down, giving us a new high, for example, and a new low, and then we break this, I'll be looking for potential bullishness. If we pull back higher and then break down, I'll be looking for potential bearishness. But remember, we have to be realistic in what we expect price to do. We're not expecting these ranges to be created and just it play out immediately within a week. So right here, I'm looking for price to run this low and potentially put in a new bearish high. This is at market open, or pull back into the premium of this sell range right here, okay, to give us a nice sell-off down to our target, which is this low. If that doesn't happen and we break higher, we'll look for potential long scenarios leading us into where? The equilibrium of the higher time frame range that we showed you earlier. So again, with gold, I'm pretty open to ideas on gold. There is really no clear setup for me right now, and my primary focus is on euro, as it is a lot cleaner for the way I would like to interpret price action. So guys, this was the brief overlook for the 26th of May. I hope you've all enjoyed this video and you found it useful. Remember, drop us a comment down below and a like if you have enjoyed this, and if you would like to be a part of our live sessions, the Discord is the place to be. Until then, guys, use appropriate risk, trade safe, and I will catch you all in the next one. Peace out.